My experience with the Payday loan was mine was an installment loan, which meant that I was paying $130 every 2 weeks. Every time I got paid, I had to make a payment.
Payday lending is a method of borrowing in which you can get money very quickly, but at a very exorbitant interest rate. So we are not talking interest rates of 25%. We are talking interest and fees that equate to 200 to 300% or more. And what makes that an issue in Michigan right now is they really prey upon people who can least afford to pay it.
So if something happens, you get a flat tire or your refrigerator goes out, you need some extra money and your credit score isn't going to support a loan, you don't have anything saved, what are you going to do? The only opportunity they have is to go to a payday lender.
It's beyond dangerous. It's, you know, for many people, it keeps them in poverty long term.
What I borrowed was $800. 2 years later, I still had $800 that I owed on that loan. And I was paying $260 a month.
The cap on a payday loan is $600, so they should not be loaning anyone more than $600 on a payday loan event. But beyond that, it is illegal for anyone to have been issued more than 2 payday loans in the state of Michigan at any time that are still open and active. Back in October, we really wanted to dig into this issue and see what we were seeing with our clients. And so what we found was that we had 48 people who had these loans, but 61 loans total. 3 of the 48 had 3 loans or more. We expected that there would be no loans in this system that were over $600, plus the fee of up to $76 that they can charge. So we expected to see a lot of 676s and below. And we did to some extent. So the first were 676 or below, but the other 20 were more than that. And there were some in here that were in the thousands. So we had 2 loans that were for $2,000 each and 1 loan that was for $8,000. These are all from payday lending institutions. So what's interesting about that is we know that's illegal in Michigan. How is this even happening? How are they getting away with this? And certainly, how are these 3 clients getting a 3rd loan when the other 2 are still open and active? And what we're learning is that there's a lot of ways that payday lending companies try to get around this, and one of them is to be virtual.
The company that I took the loan out of was from another state. They were charging even more because it wasn't even a Michigan-based company and they could get away with it. It's horrendous the way people are preyed upon with these types of things, and there's just no way to get out of it.
We wanted to help them get out of that at a lesser interest rate because what they were paying was not, there wasn't a way out of that.
This is a pilot program. We've provided 49 loans to families who were either involved in a payday loan or were contemplating getting a payday loan as a result of their personal financial situation. The only way that we can't work with a family is if there's an inability to repay the loan. But what we can do is work with them to determine how to increase their income. We have everybody come through financial education, financial coaching individually, and then we assist them to get to the point where they can qualify. For ICCF, we see this as a critical component in our mission to promote family responsibility and independence, freedom from that debt trap that is so prevalent with payday loans.
You know, in terms of the payday lender, they'll kind of start going through a cycle. Well, they'll take out another payday loan to pay off the first one, and just kind of, it really snowballs. With our loan program, it really is kind of the opposite of that. It's a fixed term rate loan, they pay it off, and then because of the Savings for Success program, you know, they're walking off with, you know, $240 to $520 in a savings account.
The loan program really originated out of a conversation at one of our Lakeshore Employer Resource Network meetings. Each of the companies was discussing, as we were coming out of the economic downturn, the number of 401k loans that they were being requested from employees, or employees coming in for hardship purposes because of payday lending, transportation, or utility issues. And then instead of an employer trying to create an internal program, we decided to partner with a credit union locally.
It's a bridge loan and savings plan, and it's designed to help employed individuals who maybe have damaged credit or have a life circumstance that comes up that they need access to reputable lending to help them keep going to work, so it's not interrupting their ability to get to work.
Mom was out on maternity leave. The maternity leave got a little bit extended. During that time period, she'd gotten behind on some utility bills. I said, well, we could explore a loan, and her response was, no, we can't. We talked about our bridge loan program, and she's like, I don't think you understand, my credit's so bad that that I won't be able to get this. And I had told her that we didn't look at credit, and it just did not connect with her. Loan, was not, part of her vocabulary. And I said, really, because you've been here multiple years, with this company, and you've got a good reputation here. That will serve in lieu of your credit score.
It requires that they sit down with a success coach and look at the affordability of the loan as opposed to just giving somebody a loan without looking at the ability to pay it back.
The loan that we provide has a savings element. If your payment is $25 every 2 weeks, $10 that's required is added to that amount. That $10 goes into a savings account. It's frozen. It cannot be accessed until the loan is paid off.
We found that most people actually continue to save after the loan is paid off.
We have members who started back in the early 2012 who now have several $1,000s in savings, and these were first-time savers. So there's just this huge reward in seeing people realize that, wow, I can save money.
And so each of the ERNs that we have, there are 8 in the state right now, they all have a loan component in partnership with a local credit union or community bank.
So we're a community development credit union. The people that we try to serve are the ones that are a little bit more disenfranchised. About 75% of our members have less than $500 on deposit with us, a total savings relationship. We came up with this product called My Pay Today, which is an alternative to payday lenders. It costs about 80% less than if you were doing those same transactions at Check and Go. So it's a remarkable savings. It's like $600 or $700 per person per year. So we have an annual fee, sort of like a credit card has an annual fee, of $70, and then 18% after that. And the way it's designed is you come in, you get your $500, and instead of having to pay it back on your next payday, which is less than 2 weeks, you have 2 months to pay it back. We also report it to credit bureaus. So while you're paying your loan back, you're also improving your credit score. We did a study on our sustainability. Our loss ratio on this product is 15%. So if you're looking at the rate that we charge, which is 18%, that's only a spread of 3%, which really isn't sustainable all by itself. And that's where the annual fee comes in, and that helps us to pay for everything else that goes along. In the end, it is sustainable, but again, we don't make that much. For us, it was worth it because it's very popular with our members.
There are credit union products that are being developed that will be alternatives to payday lending. There aren't a lot of them though. If you have found yourself in a position where you have one of these predatory products, we really do want to help, and that's what the Financial Empowerment Center is here for. So we are a partnership of the City of Lansing City Government and Capital Area Community Services, which is your local community action agency. And so we are a free service. We absolutely never charge for anything. It's very safe, confidential, professional, and you can come in and talk with one of our counselors about this issue or any other issues you're having with your finances.